All right, everybody, Rick Berube here in another Facebook Live on this lovely Tuesday, the week before Thanksgiving. I hope you're all doing well. Today, we are very fortunate to have from Prosperity Mortgage, Jon-Eric Lehman. John, welcome to the show.
Hello. Thank you. Thank you very much. Nice to be here.
As you can see, the studio audience goes crazy and cool.
I
So
love
anyway,
it.
yeah. So tell us a little about yourself, Jon-Eric. How long you've been doing this, just so they get an idea of who you are.
Certainly. So, as you know, my name is Jon-Eric Lehman. So it's two words. It is a pain in the rear. Yes. I actually answered the phone once and I said, "Hello, this is Jon-Eric," and the person on the other end of the phone said, "Generic." So that's been the joke my whole life, is generic, yes. But so I've been in the industry I'm 4 months shy of 20 years. So I'm almost at the 20-year mark. So I'm from Seattle originally. I knew I wanted to get out the second I could because I didn't like the weather. And I moved to Southern California. I started in San Diego, went to LA for 10 years. And I was in LA and I was working for a top 100 company, one of the biggest companies in the world. So I was there, the manager for their data, basically, managing everything they sold in the country. So it was Nestle USA. So I was there, um, the manager. I wrote the reports basically, and so I decided to leave LA and move to Palm Springs. So I live in it got even hotter. I went from San Diego, where it wasn't hot enough, even though I love the ocean. And I live in Palm Springs. I've been here almost 20 years, and I got into the industry then. So I started at the bottom, started out answering the phones, got my license, learned how to process loans, and I worked my way up. And now I'm the regional mortgage manager for Prosperity. I have parts of Orange County and Riverside County. So,
Awesome. You live in a
so I
great.
basically started from the ground up, and I think that's the best way to do it in anything you do.
I agree 100%. Yeah, and it's funny because I lived in San Diego for a year too, and I always thought I think it's a little cooler than most people think here.
Yeah, yeah, definitely. I thought it was going to be this tropical wonderland, and it was cold. So now I live in
It-
the desert.
so you definitely have plenty of heat there in the desert. So do we in Vegas and Arizona as well. So, but it's a great
For
place to
sure.
live. I love the Palm Springs area. It's great. It's especially if you love golf, and it's got its own little trendy vibe, which I love too.
Definitely. It's definitely bohemian in areas, and it's got two sides of the valley, right? One is bohemian, and the other is kind of normal people. So it's definitely a niche market for sure.
Right. Yeah. Absolutely. Okay. Cool. 20 years. Wow. That's a veteran of this business, and I've been doing this for a while myself too. So I know exactly. I've been doing it my whole life basically, and so you learn a lot. So what's this lately? What are you thinking based on what's going on with the rates and so forth?
Well, the Fed did this because of COVID, so I'm going to blame everything on the Fed.
I
Thank you, Jerome. Uh, they say that so when we had the great crash of '08, the Fed buys mortgage bonds, which is that's how he manipulates the rates. And when they saw the pandemic hit, instead of doing it in a slow, methodical manner, he just went out and bought hundreds of billions of dollars of mortgage bonds to drop the rate. So we dropped off a cliff instead of doing it slowly, and that's what caused the craze of 20 and 21, right?
right.
The craze in the real estate industry. Instead of doing it slowly and methodically, he did it like a madman, and then he did the reverse. So
Right.
that's why we saw rates drop. They dropped quickly and they went up faster than any time in history. So
History.
so
Yeah.
he's using a sledgehammer instead of a chisel a little tiny jeweler's hammer or something. It's crazy what he's doing to us.
Yeah.
But I will say you can see what happened on Thursday when there was one good thing said about inflation. the bond market went crazy. The bond market went up over 200 basis points, which it has never done in one day before. So
Right.
that was great for us. The market wants to rebound and it's desperate for it. So it's any bit of good news on inflation is going to help. So the minute we get inflation under control is when we're going to see mortgage rates come back down. And I call them the crystal ball gazers, right? All the economists that deal with mortgages, everybody is saying that within a year, give or take, we're going to be back to normal, mid fours, five. So that's where this saying, marry the house and date the rate, right? Just don't wait, right? Buy the house now and refinance when the rates get normal.
Yeah. Yeah, I love that. I love that saying. I think it's great. And I did my video this morning in Las Vegas. I had Karen and Eddie come into my Success Series Thursday afternoon, and they told the story about, but at that particular time, the rate was like, I don't know, 6.5, and the person bought it down to 4.5, and it cost them $6,900. Or, you could lower the purchase price by 35,000 to get that same payment. I thought that was a great way
Right.
to so I did a video on it because I think it's when you're negotiating as a buyer's agent, it's a great way to propose it. In order to have that same payment from the rates, and even at 4.5, that's still higher than it was in January. But that's like you just said,
Right.
Jon-Eric. That's a good rate today. I don't care what I mean. Historically, 4.5, that's a dynamite rate.
That's a dynamite rate. You're absolutely right. And we're telling people to do a 2-1 buy down where
Right.
if the rate's 7.5, you get 5.5 for the first year, 6.5 the second year, and then 7.5 for the rest. And you're going to be refinanced out of that into 4.5 in a year or so. So there's no reason not to do that rather than pay points because you're not going to keep that mortgage, right? If you pay points to buy your rate down, if you do a 2-1 buy down, it's a little different, but it gives you a lower rate for the first year, 2 years. So it's definitely worth looking into.
Yeah, and this particular example was a permanent buy down. So they just bought it down. It wasn't a 2-1, so it was a little bit more expensive, I think, but it ended up working out really well. So, however you do it, I mean, look, if I'm a buyer today, at least I can pick the house I want. A year ago, I was paying over asking, no inspection, no appraisal. Now I can pick the house I want, have an inspection, have an appraisal, get stuff done, have the seller chip in towards a rate buy down, and the payment ends up being very similar anyway. And I agree with you
Right.
too, John. The Fed as well, because the Fed, I mean, look at when you pump 20% of the money currently in circulation into circulation in a 24-month period, you're going to have inflation too. And then they could have eased it up, but you're right. They just
Or,
went. But how many? We've never
yeah,
had 3.75s, 4.75s in 1 year. Never had that before. It's off the charts.
it is off the charts. And I don't know, I don't pretend to understand what the Fed is thinking, but it's not what I would have done. I always pretend and say, I'm going to get on the phone and call him and tell him
Well,
he's doing it wrong, but he's not
yeah.
going to listen.
Well, because they only care about one number because the press is torturing them, and that's the inflation numbers. They don't care about the jobs anymore because the job market's good. They don't care about interest rates for mortgages or cars or credit card. They don't care anything about that. They just want to get the press off their back. Now, here's the good news though. You go from 8.4 inflation rate to 7.7, right? You would think, but it's still 7.7 historically. That's still 2 or 3 times where you want it to be, even 4 times, right? But
Yeah.
look what it market. The the
Yeah.
the the stock market went up and the interest rates. So if we got a few more of those baked in every time it goes down half a point, 3/4 of a point, that's a really good sign for next year, right?
Definitely, yes. If it keeps happening that way, I mean, like you said, the market is just begging for some good information
Really,
on inflation. And every time that happens, the mortgage rate is going to drop a little bit further because it affects the 10-year treasury.
right,
So that's all we need to get back to normal is to get the inflation under control.
right. Yeah, and because you can't hide this number, there are way more people that want to buy, can buy, are going to buy than houses available because of the shortage of houses or new houses built over the last 15 years. And as soon as that gets back into gear, you know, you're going to see that happen. I'm not saying it's going to be like, you know, the end of 2020 was incredible, and most of 2021 is. I don't know if it'll be like that again, but it's definitely going to be a little quicker than it's moving right now. Even that, you know, even saying that though, it is not that bad right now at all.
No, the good news is, like you said, there are houses to buy now, whereas
Right,
before there was nothing. I mean, at one point there was like 6 houses in all of Palm Springs on the
right,
market.
right.
So, I mean, it's a small town, but still, like 6 houses, 10 houses, that's crazy. So
Yeah.
now you have a choice. So now is not the time to sit on the sidelines. Now is the time to buy.
It really is, and I know everybody says that, but even what's his name? What's his name? The guy that does the credit. Oh my God, I can't think of his name right now. But even he, the guy who he wrote the book about lowering your I can't think of his name. Wow, mind fade. But anyway, even he is saying, you know, go out and buy the house. You know, I know the rates are higher,
Right.
but you know, for the next 5 years, it's still the best time to buy right now. And I agree with him. Okay, because you know, you can't hide the inventory situation.
Right, exactly. And regardless of what happens, yes, everything is cyclical, right? Real estate is still always going to go up. I mean, we're way above where we were in '08, '09, after the crash, the greatest crash in history. We're still way above that. So even if we lose a little bit of these insane inflated prices, fine, we
Right.
can lose a little bit, right? It's not going to hurt anything. Nobody's going to lose. We have more equity in housing right now than in history ever before.
Yeah, and that's a big part of it too. We do have more, and I see a lot of economists talking about that too. Even though we've had a slight price adjustment, it's still. I mean, if you owned a house 4 years, it's gone up in excess of 50%. If you've owned it for 7 or 8, it's doubled in value and holding strong. Even though we've had a little bit of, a little planing off. I wouldn't call it
Right.
depreciation. Planing off situation. Still incredible, and I love what you said too, Jon-Eric. The market's begging to be put back in gear, and I think this, you know, the inflation numbers as they come down, it'll kick into gear a little bit more and a little bit more, which is great because you know some people are actually predicting that you know this is the bubble, and every time I hear that, I'm like, where are you getting your numbers? Have you ever Big Short? I mean, that's when it was bad.
Right, right. This is not a bubble for sure. So we might see some lowering of the equity gain, but that's just back to normal.
Right,
Not actually dropping and going negative in equity. It's just going back to normal, which would
right,
be good for everyone. Just get it back to normal.
right. I agree with you. I agree with you. Okay, so I'm looking for a house today, and I want to use prosperity. Give us a couple of goodies, and I don't know you guys have several, but what are some of the things that
Yeah.
you're talking about right now?
So we're definitely talking about first we were talking about the permanent buy down. So do a permanent buy down, and 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 that's if you're going to keep the mortgage, right? If you're going to keep that mortgage, do a permanent buy down versus lowering the rate. Get the seller to give you a credit to buy your rate down. Now we've offered the 2-1 buy down because we were thinking, if people aren't going to keep that with a permanent buy down, it takes roughly 5 years, depending on the spread, right? If 1 point buys you 1/4%, it's going to take you 5 years or more to recoup the cost of that point. Two
Right,
points, right? 0.5%. It's still going to take 5 years or so to recoup the cost of that point. A 2-1 buy down gives you 2% off your rate immediately for the first year. And if we think what happens is going to happen, then you're going to refinance out of it anyway. So if you do a permanent buy down, you've wasted that money.
right,
So there's two ways of thinking about it. So the 2-1 buy down is definitely great. We have lock and shop programs, which you can lock your rate ahead of time, go out and shop for your house. We also offer something that's particular to us. And being in the community I'm in, I get asked this question all the time. What about a bridge loan? Because they want to keep their house, go buy a new house, then sell the house, and then either get a small mortgage on the new one or pay it off. So we do offer a bridge loan. So it gives the buyer the down payment based on the equity they have in their current house so that they can go buy the new house, and it gives them 6 months to sell their current house. I don't know anybody else that's offering that. There's one other
Yeah.
wholesale program, but it's a nasty, nasty program. It's a second mortgage, and you have to. It's just a terrible program. So this is our own money that we use to do this, and it's so that people have a place to live while they're selling their house, because no seller wants to. They don't want to accept an offer that's contingent upon the sale of a current house.
Right.
Now, they know pretty much that house is going to sell, so you have a better chance right now of getting a contingent offer accepted. However, with the bridge loan, you don't even have to worry about
Right. So your offer's even more solid, so you may be able to get
it.
a better deal.
Right. And we also do a fully underwritten pre-approval. So on line H, you check that box that you're fully underwritten, and you can go in with no loan contingency. So that's something that we offer that really, because in this area, I don't know about Las Vegas, but we're about 65% cash. So we have to do everything we can to beat out cash buyers.
Right. Yeah.
So fully underwritten pre-approval with no loan contingency helps a lot.
Yeah. So you educate the buyer into why this is a good way to go, and so they end up getting the house that they want instead of settling or not getting it, which is
Right, exactly, because they lose out to cash a lot because they're worried
right.
about those sellers worried about is their loan going to close?
Right. Good point. Very good point. I like that a lot, actually. And if they qualify to do it, it's a really good route to go.
Yeah, for sure, absolutely, and we'll do it on all of my buyers. The normal process is I gather their paperwork and I pre-underwrite their file and I write a pre-approval. So I'm the regional manager, but I still do loans myself, right? I have my own team. I've built
Yeah.
my team. My assistant's been with me for 18 of the 19 and a half, 20 years I've been in this industry. And so I still do loans myself. And so I know what my loan officers are going through. And
Yeah.
this is a great tool to get buyers into those houses and to compete against cash.
Right. I love it. I love it. Now tell them a little about the under. So what does that mean? I'm underwritten. Just give me an idea what that means.
So I take your application, I gather all of your paperwork as if you were going to submit it to underwriting, and then I actually do. I submit your file to underwriting even though you don't have a house chosen yet. Now,
Right.
I've got to give an estimated purchase price. So we'll usually do the highest that you think you're going to buy or you want to buy, or the maximum that you'll qualify for. And the underwriter simply underwrites it without an address. So it's fully underwritten except for the address. So, of course, once you find a house, we need to do an appraisal. Sometimes we get an appraisal waiver where you don't even need the appraisal, or you do a hybrid appraisal where it's a desktop appraisal and somebody goes and takes some photos, and then you're done, period.
Right. That's such a great way to do it, and it gives you that bargaining power when you're negotiating because you're ready to rock. Especially if you have your underwriting in, your bridge loan in, and then you're a cash buyer basically.
Yeah, you're ready to go, you're already underwritten. All we have to do is update, get the prelim and the appraisal, and you're done.
I love it.
Now we also do all the digital verifications. I had one the other day where in this area we don't have a lot of W2 W2 buyers, employees. We have a lot of self-employed or their commission, or hotel industry where they have a lot of tips or whatever. But
Right.
we do digital. So W2 buyer, digitally verified income, digitally verified assets, and there was no appraisal needed. So it was approved in one day.
Wow, that's great. Awesome. I
Done.
love.
Yes.
Cool. Cool. Awesome. And what's really interesting for me, because, I've been doing this for 38 years myself. I've been in real estate since I was 19. I'll be 58 next month. This is my 38th year in real estate. And what I've learned since I've been at the company now almost 9 years here, we've had a few mortgage companies. Prosperity is going to be here for good because you're owned by corporate, we're owned by corporate. But with prosperity,
Right.
I'm impressed with like people like yourself, John, Ira. I mean, a lot of the, Eddie, Karen, the people that you guys, Roy. I mean, I could go on and on. The people that you guys have attracted to come and form prosperity in our four markets. We got some. You guys have some really good, educated, extremely well experienced loan originators, don't you?
Yes, we do. And we were very lucky to get my team in this area because it's such a niche market that if you don't have experience in this market, we have a lot of lease land, Bureau of Indian Affairs
Right,
lease land, and
right,
so many companies come here and they're constantly calling me saying we're gonna move to your area, and they bring in loan officers who have no idea what it's like to do business here, and they're out in 6 months. So
right.
we're very lucky to have gotten the people that we got in all three of these areas. So we're very lucky because of the knowledge that we've hired.
Absolutely, absolutely. I love it. All right, cool. We're about out of time here, John. Jon-Eric just wanted to say any final words you want to leave these lovely people today.
Listen, when you're working with your realtor, and I have this conversation with buyers all the time because a lot of times a buyer will come to an area and they have their own lender, right? But listen
Right,
to your realtor. So you got to have you as the realtor need to sell your partner, right? Because the reason for our existence is to close loans for you. And so
right,
I always tell the buyer, your realtor referred me because they trust me.
right,
And you trust your realtor, right?
right.
So, because it's all about trust. You're
Yeah,
bearing your financial soul to me, so it has to be somebody trustworthy. So, you definitely want to build your team and show your buyers that they're trustworthy. That's what I would say.
I love it.
Because
I love it.
without trust, there's nothing.
No, there's nothing, and like a lot of people, like when they deal with the big banks like Chase and
Right.
you know America, they have that experience, and then they know what you're talking about. A nice mortgage company with somebody local who knows, like you just said, lease land in your area. You got to know what you're doing. It's not easy to get a mortgage.
Mm,
You got to do it the right way. So
as an example, Wells Fargo just declined a client 3 weeks into the transaction. So we stepped in and we closed it in 1 week at the original contract date.
yes, I
I,
love it.
I have no idea why Wells Fargo, they just decided to decline it. Happens all the time with the big banks.
Because you're a number, and if it doesn't fit their little guidelines, then it's not
Right.
worth it. It's amazing how many people trust them and they don't understand really what's going on. Seriously.
Yep.
Yeah.
You're absolutely right.
All right, John,
So
Eric, thank you very much for taking your time out today. We really
thank
appreciate
you.
it. Prosperity a chance. Give Jon-Eric a chance, and we'll talk to you soon, my man. Thank you,
Thank you. Bye.
everybody.